Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, March 29th, 2019, and this is the daily report for gold and silver, our weekend review, and what a week we have seen with yesterday's virtual meltdown, especially in Palladium. We had Thursday as well as Wednesday both experiencing about $100 drawdowns each day in that precious metal. And the real question on analysts and market participants' minds are whether or not yesterday's sell-off is signaling more to come or a one-and-done event. My sense is that it's a one-and-done event in that the fundamental factors that have been influencing and creating the bullish market sentiment in the precious metals are still intact. The dispute between China and the United States continue to have an effect on the global economy, slowing it down. The Federal Reserve continues its dovish stance, announcing 0 interest rate hikes this year and only 1 next year, and we still have unresolved issues with Brexit and how Britain will leave the European Union. To that effect, as long as these factors remain in the minds of traders and participants, we should see bullish market sentiment for the precious metals. With that in mind, let's take a look at price changes. First of all, gold. And this is basis the most active June contract, closed up $1.70, the smallest increase on the day, $1,297 per ounce. Silver, about 0.9%, closing at $15.10. Platinum gaining well over a full percentage point today, gaining $8.70, closing at $846.90. And lastly, a tremendous recovery in Palladium, closing up $44 at $1354.30, and that is an increase of almost 3.5%. Let's take a look at our technical studies. Traders, I truly believe that yesterday's downside action was a one-and-done scenario. It was an overdone sell-off, and I think that there's a high probability that we will return to the prevalent bullish market sentiment. As I explained in my opening letter as well as opening statement, there's 3 primary factors that have been fueling that bullish sentiment, and all 3 still remain in the market. On a technical basis, I want to focus on 2 markets in particular, gold as well as palladium. We are looking at a daily chart of candlesticks in gold. We have basically 1 fib retracement, which goes from 1195 all the way up to this top at about 1350. Now, when we look at the correction that occurred immediately following, you can see it went well past the 0.38% retracement and fell to the 0.44, which is not exactly a standard number, but that is in fact where we found a bottom, roughly at 1281. From there, the market rose again, but then stalled right here at 2122 in terms of pricing. But here's what I'm seeing. The low that we had yesterday was below the 0.38% retracement. However, the low today was just at the 0.38 retracement level, and the pattern that is formed is a bullish harami. A bullish harami occurs after a basic downtrend in the market. It's basically an inside trading day, but what makes it a harami pattern in Japanese, because harami means pregnant, is that you have a very, very small bodied candle approximately in the center of a long red candle. And so for that reason, if we get a confirming candle tomorrow, and for this you would have a green candle with a higher high and a higher low, you would actually trigger a buy signal. So we'll have to see how that pans out next week. And I think that we will see a pretty swift recovery. And traders, the other market that I do want to look at is palladium. Again, we are looking at a daily chart. We have got a couple of different moving averages, the 100 and the 50-day. Of course, gold and palladium broke below their short-term 50-day moving average. In the case of palladium, though, we had a $200 drop on Thursday and Wednesday. And here's what's interesting. We've got the 0.38% retracement. That is this long retracement that we just spoke about from 815 all the way up to these highs at 1,578. When we do that, the 0.38% retracement comes in at 1288. The lows that came in both yesterday and today were just above it. But take a look at this 100-day moving average. Yesterday, that was precisely the low that it came in. And again, we have this pattern of a bullish harami, a small-bodied green candle after a defined downtrend. So both markets, to me, are indicating the potential for much higher pricing next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.